Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Tom Lee reveals the crypto market could be bottoming this week. This video covers his market predictions, trends, and insights. Join us to uncover his engaging analysis and learn more.
Let's bring in Tom Lee, Fundstrat co-founder, managing partner in Fundstrat Capital CIO, and I can just see you. This is Tom laying out exactly as you said choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving, and this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody's thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs, because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline.
Yes,
for financial markets, or a continuation of very expensive, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that. Wouldn't you?
Yeah. I think, or even rebuilding parts of the U.S.
Exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye, because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than one or two rate cuts, I could see the market rally on that.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think the Trump put comes back. So I think it helps market.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? Let's say we do have a softer jobs report. The Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. The Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, it could be well under 100,000. And if it is, I think the Fed would actually have to get off their hawkish paws.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news and markets bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative. So maybe Friday, but it could have already bottomed too.
Bitcoin's price has experienced a significant downturn recently, sparking debates about how low it could ultimately go. After rallying to nearly $95,000 on March 2, the digital asset has dropped more than 8.5% in just 24 hours, tumbling to around $83,800 at one point. This sharp decline, along with breaching the 200-day simple moving average, raises serious concerns about a deeper market correction. The sudden drop wiped out recent gains and coincided with the implementation of U.S. trade tariffs on imports from Mexico, Canada, and China, which further fueled the market sell-off and liquidated hundreds of millions in long positions. Technical analysis reveals that significant buyer interest exists within the $70,000 to $80,000 range, suggesting that Bitcoin may continue falling to clear liquidity before a recovery takes hold. Some experts believe persistent selling pressure could drive the price as low as $70,000, especially if it falls below critical support levels such as the February 28 low around $78,200. Recent bearish signals, including a crossover where the 50-day moving average dropped below the 100-day moving average, indicate a shift in market sentiment from optimism to caution. With global economic data and geopolitical events influencing investor behavior, traders are watching closely to determine whether Bitcoin can stabilize or if further declines are inevitable. The coming days will be crucial as the market tests these support levels and seeks a clear direction for future recovery. Investors remain cautious and hopeful, as every move in this market adds another chapter to Bitcoin's evolving story.
Even aside from these macro sort of outlooks, how about the AI trade? I mean, we've certainly seen signs of weakening, some skepticism there, especially surrounding NVIDIA, which hasn't filled in that pre-DeepSeek gap that it created. Where does that stay? How important is that for this next move forward for the bottoming process?
I think technology is still important for the next few years. In our sector weightings this year, it's number 3. So financials, industrials, first and second. But I think it's just digesting a lot of the prodigious gains the last 2 years. But I don't think AI spending is really going to weaken. I know investors have a lot of good news baked in.
So I think the market, if it does resume a move higher, you think it's the same leadership, or there has been some rotation away from some of the Mag 7 and financials have looked strong. Will it look different, or will the winners come back with a vengeance?
Yeah, in January, the first, let's say, five weeks or so, that leadership was different because it was a lot more tech outside of the Mag 7, and it was financials, and it was some mid and small caps. I think once we're through this rough patch, that's the kind of leadership we think will.
Right. You want to make some. I don't know why we told you people you were going to talk about Bitcoin, but now that we did, you do need to talk about it. It's come back a little bit. What did you attribute the move down below 80 to? Just that it's Bitcoin. What do you want?
Yes. I would say what's interesting is Bitcoin's not had negative headlines in February, but it was down. But I know our technician, Mark Newton, had talked about this being a cyclical downturn in Bitcoin through the end of March. So he was talking mid-January, getting down to 62. The weekend...
105 to 62. That's just Bitcoin.
Yeah, it's a typical...
Do the math, though. It's like, in a month, 105 to 62.
Yeah, that's a test of the result.
That hurts people that buy at 105.
Yeah, but as you know, Bitcoin makes all of its gains in 10 days. So if people sort of try to time this, they're going to miss out on a chance for Bitcoin to go back to its high.
And by the end, at some point in this year, you think it gets, because last year you thought it might get to 150 or even higher, right?
Yeah. I think it's going to do better than 150 this year.
You do?
Yeah.
US dollar?
Yes.
What? 150?
Hungarian forint?
Yeah.
I
don't know. Something that's a lot less than $150,000. It's a lot better than a lot higher than 150.
That's right, because it's becoming more widely held.
Yeah.
If Citadel starts trading it, it starts to have more broad acceptance.
Okay. Tom Lee, thanks.
Thank you.
Don't be a stranger. You're not, but come back again. Thank you.
Bitcoin mirrors patterns observed in 2023 and 2024, entering its third corrective phase since the start of its bullish rally. The recent trend shows a pause in the upward momentum as prices fluctuate between $80,000 and $100,000, reminiscent of the summer pullbacks seen in previous cycles. History suggests that these corrective periods serve as necessary resets, allowing the market to digest gains before resuming its upward surge. Traders and investors find these cycles fascinating, as a decisive breakout above $100,000 could signal the end of this consolidation and ignite a parabolic move toward $130,000. During past corrections, technical indicators such as the convergence of UTXO age bands have highlighted moments of temporary resistance when long-term holders absorbed supply, setting the stage for renewed momentum. The pattern has been consistent. Rapid expansion phases followed by multi-month consolidations that prepare Bitcoin for its next significant leap. As Bitcoin nears this critical juncture, market participants remain cautiously optimistic that the current phase will be short-lived. The data points to a likely period of stabilization, lasting another 2 to 3 months before a robust breakout occurs. With the potential to surpass previous highs, the ongoing correction could lay the foundation for rapid gains in the near future. Investors continue to monitor key resistance levels, technical signals, and historical trends, eagerly anticipating the moment when Bitcoin finally charges toward the $130,000 mark. This unfolding scenario excites both seasoned investors and newcomers alike, as every market cycle renews hope for unprecedented gains in Bitcoin's future, truly. And do not forget to subscribe to BitcoinZella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.